The Kenya Bankers Association has welcomed the move by the National Treasury to adopt a tax exemption for Kenyans earning 30,000 shillings and below. The bankers' umbrella body is now calling on the government to cut salary taxes by at least 5% across the board, arguing that the move would ease pressure on household incomes and stimulate economic activity. While welcoming recent signals by the Treasury to exempt low-income earners from pay-as-you-earn, the lobby group described the proposal as a weak signal that falls short of addressing the broader tax burden facing workers. Jimmy Mbogo reports.
The Kenya Bankers Association, which has been a long-term proponent of a review of the tax rates in the country, has welcomed the sentiments of the National Treasury to exempt more Kenyans from the pay-as-you-earn tax bracket, saying this is a step in the right direction. The bankers further want the government to ensure fairness by cutting down the tax rate for all income bands by 5% and cap the maximum tax rate on salaries at 30%.
Tax on individual income should not be more than the income tax that we tax on our corporates. So our corporates currently, we have capped it at 30%, and yet for individual income earners, we have gone as high as 35%. That's also the reason as to why we are saying let's be able to live within the law, within the policies that we have actually been able to agree with consultatively. And because the macros are looking good, it's time now to be able now to live up to the spirit of that policy.
The inclusion of those earning up to 30,000 shillings will see the number of salaried Kenyans exempted from the PAYE tax increase from the current 4% to about 6% of those in formal employment, or about 204,000 Kenyans, a number that the bankers contend is not significant enough to move the needle.
Exempting up to 30,000 earners, it's a good signal, although weak signal. We need to ensure that as a country we become very bold, and that's why as Kenya Bankers Association we are saying the boldness will be in a 5% pay-as-you-earn rate reduction across all the pay-as-you-earn bands.
The association further warns that a partial exemption for low-income earners only may not result in the maximum impact that the policy shift is intended for, but could instead create a crisis in the labour market.
When we come to matters taxation, matters relief, let it apply to all the categories of workers, because it may be good when you look at it, but when we haven't looked at it from an employment perspective and where you're applying it, we may create a crisis that now the companies will have a challenge. And then again, even as a company, you can't go out and increase salary for high income earners and start saying you got a relief. That cannot happen.
Jimmy Mbogo, Citizen TV, Nairobi.